I would like to welcome you to Women and Finances. And I am joined here with Lori Nadglowski. Thank you so much for joining us this evening, Lori.
Yeah, well, thank you for having me. I really enjoy Money Smart Week and being able to share some financial tips to people.
Awesome. And thank you so much for being here. So before I hand things over to Lori, really quick, we just have a quick book shout out. We have the book Worth It, Your Life, Your Money, Your Terms by Amanda Steinberg. It can be found in our library catalog. So if you just visit hcplc.org/books, you will be able to find this book along with a lot of other books that can help you in your financial journey. So now that we have covered a few library things, I am going to hand things over to Lori. Lori, you should now have screen control. I
Okay,
am now going to hide myself and I'm going to go ahead and let you take it away. So go ahead and take it away, Lori.
great. Well, hello, everyone. It's great to see you. Money Smart Week is one of my favorite weeks because usually I do some programs for the children, but luckily I'm able to still do something this time on an online program. And today's program is really going to be about women in finances. And I saw that she posted one of the books, and I was actually in a bookstore today. I haven't been in a bookstore in quite a while, but I was looking through some of the sections and some of the new nonfiction books that had come out, and I was surprised to see how many were on financial topics. So this is something that a lot of people are interested in. There's a lot of books written about the topic. And I have 25 minutes, so I will be able to cover a very little bit of it, but just to give you an overview of some of the things that are important as women in finances and women in wealth, women in finances. I encourage you to check out books out of the library. A lot of them are sharing the importance of why women need to learn more about their finances. There is a workbook that you'll see as one of the handouts, and that's really what I'm going to cover tonight. I think this is a great start to get you thinking about some of the financial terms and see where you need to learn, get some more information on it. So I am going to go ahead and advance to the next, to page 1. And this is kind of an overview of what we're going to go on. So here's a process that I'm going to go through tonight about what this workbook will do. And it's a process of setting financial goals, creating a plan, and putting a plan in place. When you get down to it, really your finances are about 3 different things. Where are you now? Where do you want to go? And putting a plan in place on how to get there. This workbook and what I'll talk about tonight are just going to be an overview of how to do that. You'll be able to take this and do it on your own time, figure out where you need some extra help. The reason why it's important is women are typically live longer than men. At some point in your life, you will probably be single and you'll be in charge of your own finances. Divorced or widowed make up half the women in the US at over 70 are widows. So if you're divorced or widowed, you will end up single and you'll end up in charge of your finances. A lot of women, you can see here the statistics that 46% of women are not confident or not confident at all about their retirement. And so let's get started. We're going to go on the first page, which is on how you can get organized. So I'll shrink this just a little bit so you can see it all. So the first step into doing this is it says to create your family legacy and write down some important financial information. So what's really important on this page is this is going to say, where am I now? So what's your net worth? Your net worth has to do with adding up all your assets, everything that you own, subtracting out your liabilities. Those are the money that you owe. And then the difference between that is going to be your net worth. And so that's what's going to tell us, where are you today? Gather up all of your checking and savings accounts, your retirement accounts, things that you have of your 401ks. It could be a 403B. It depends if you work for a government agency. You might also want to look and see what your, if you have a pension or anything like that, gather those assets, any other investments that you have. It could be a brokerage account. It could be just a regular savings account or a CD that's being held at a bank. Real estate, your house, any other property that you own, and then any other asset that could be sold and turned into cash or that could be used for retirement. Sometimes I see savings bonds. It could be precious metals. You might have gold, silver, other types of collections that you might be available to sell. And this is a really small worksheet that's in this notebook that you can print out, but I would use Excel, or you also can use some of the aggregator tools that you can find online. Mint is one of them, where you can connect all your accounts and then it will do this for you without having to do it yourself, or you can just use, simple pencil and paper and put it on here. Add up everything that you have. So, look at your checking and savings accounts, your retirement, investments, real estate. You'll get the total assets. If you want to take it a step further, write down the account numbers, write down your contact information. That will be helpful if something happens to you and someone else has to access your account information. You never know, it is not necessarily at death. It could be that maybe you're incapacitated. You could be out of the country and something happens and somebody needs to access your checking account or pay bills or something like that. So putting an organization together, and not only just putting the amount down, but also, going through and doing that extra step of documenting everything that you have. The next is add up your liabilities, and mortgage, credit card debt. Pull every single credit card statement that you have, whether you have a balance on it or not, just so that you know that you have it. Your car loans, student loans, other debt could be for just a signature loan that you have at the bank. Everything else, add it up. Those are your total liabilities. Take the difference between the two, total assets minus total liabilities, and that's going to give us your net worth. And so this is going to give you that starting point, because if we don't know where we are, we don't know how to put a plan in place to get where we're trying to go. So first, we're going to start with where am I now? We've got that on. We've got that. And so step number 2 is, let's just go into the next page, is what's your net income? How much money do you have left at the end of each month? And where is your money going? This is really a great tool for that aggregator. I've used, there's several things that are available on the internet. I noticed when I logged into my bank account recently that they actually had this available where you could go in and it would pull in all of the information from all of my bank accounts to say how we were spending money. I use a different program. I know that Quicken has something that you can do that doesn't have ads in it. Mint is one of the online services that you can use. It's by Quicken, or Intuit, which is the Quicken company, and it will, you can link all of your accounts into it, and you can go in, you can see your net worth in real time, and then you also can see your budget. So what's your net income? Add up your salary, and I suggest that the first time you do this, you look at not just what your net salary is. And your net salary is going to be anything that what you're paid is your gross, less your less taxes, and then less anything that other deductions that are taken out of your paycheck. So I would want to see your gross income first, and then look and see how much you're paying in taxes, list how much the employee benefits are. I found that sometimes people sign up for benefits when they first start working, and at annual enrollment, they're busy, they don't have time to go back through it and sit through and see what all the benefits are, and they may be signed up for something that they don't want any longer. So looking at it and evaluating it this way, you can really see where your money's going. So look at your gross income. Do you have anything from investments accounts? You could have something from a savings account. Right now, there's just not very good savings rates. So there's probably not going to be very much income if you have a business. Maybe you have a side hustle or something like that. If you're selling maybe Pampered Chef or some of those other businesses like that, add that kind of income from it. And then you can get your total income. So that's how much money that you're bringing in. And I look at it, if this one says monthly income, I would start with your annual income, because not everybody is paid on a monthly basis twice a month. Sometimes you're paid 26 times per year. And so your monthly income isn't going to be consistent over the course of the year. So I would start with your annual income, and then you can break it down into your monthly income. On the expense side, I would look at all of your fixed payments, and those are going to be things like your home, your car, anything that's a car payment. It could even be something like daycare costs, anything that you have to pay every single month and it doesn't change. Your utilities is going to be under a variable cost, because that one can change a little bit, but groceries, but you don't have as much control over utilities, water and power. Your variable costs, such as groceries, maybe entertainment, vacations, some of those other kind of dining out. Your wants versus your needs are the next expenses, things that you would like to spend money on, and then anything else. So this is, of course, really tight to be able to do it. I would use Excel or write it on a piece of paper and list everything that you have. And once you get that done, for this exercise on the expense side, I would look at it on a monthly basis and then annualize it, but multiply it by 12. But and then you're on your income side, we're going to look at it more on an annual basis. And then now you're going to have how much money you're bringing in each year, how much you are spending each year, and then that's going to tell you your net income. That's going to give you the amount of money, if you have, and if it's positive, then that's the amount of money that you can save or you can do something else with and put towards other goals. If it's negative, then there's some work that you need to do, because that means that you're spending more than you're making. And it's either going to be, there's two ways to handle that. It's either going to be a reduction in your expenses, or it's going to be an increase in your income. Or you're going to have to start pulling money from savings, which is not something that you want to start doing. But this is going to give you a picture of your ability to save and your ability to meet some of your goals. So I recommend using one of those online systems, because they'll actually pull in all of your information. You can categorize it based on what makes sense to you, what you want to track individually, and then it will give you a history. So you'll be able to see it over a time frame. 1 month or usually isn't a good measure, because you have different number of days in the month. Sometimes your the way the weekends fall might influence the way that you have your expenses. And so I would look at it at a minimum a quarter, but when you pull it into some of these data aggregators, or you're looking at your bank, it will actually pull in almost a year's worth of information. So that will give you a really good picture of what you're spending. And I'm really surprised at how consistent people are. And things like, even though it's a variable cost in groceries, most people are pretty consistent month over month on how much they're spending. Usually we'll see like a little bump with things like vacations and things like that. But for the most part, most people spend the same over the course of the year. But you might be surprised at some of the places that you're spending money. So the next section is set goals. And these are going to be, where do I want to be? How do I see myself? Don't worry about where you are right now, but really think about what you want to go to. If you've ever done a vision board, this is a great place to stop and do a vision board for it. Think about, how do you want to, what is your retirement goal? Are you 10 years out from retirement, 20 years out from retirement? What do you see yourself doing when you're in retirement? Are you traveling in an RV? Are you traveling to Europe? Are you spending time with your grandchildren? Are you volunteering? And think about, with this retirement goals, when do you want to stop working? Are you willing to work part-time for part of it if you have to? And then look at some of your other financial goals that might be a little bit shorter term. Do you want a new car? Pay for a college education for yourself or for your children? Pay off a mortgage? Do you want to pay it off early? Is maybe one of your retirement goals is that I want to have my mortgage paid off before I retire? And then maybe reducing debt is one of your goals. So I would put all of these out, think about them, and don't look at necessarily where you are right now, but think about really where you really want to be. And now we've got all of those goals set down, and then we've got to go through and prioritize them. So maybe traveling is important, but maybe it would be, one of those I want to goals. Have to goals is maybe I want to retire by the time I'm 65. I want to retire by the time I'm 67. Most people who are in their 40s and 50s, 67 is going to be when you're able to collect Social Security. So that's kind of a guideline for, like for one of your retirement goals. But think about your goals and which ones are the most important to you. And those are the ones that you can start working on and looking at your budget and what you can fit in. So this is the part that's the hardest. Usually you can get together all of your information. You can see your, your assets, your liabilities, your net worth. The income, if you're honest, sometimes I get budgets and I know that they're more what they would like to spend rather than what someone is actually spending. Using the actual data from your bank account, credit cards is extremely important in putting together your income expenses. Putting this plan in place is the hard part. And sometimes you may need to look for, if you're a do-it-yourselfer, this is where you need to look for more education. You might need to go out and read some more books about it. There's some, usually on your retirement planning, if you have a 401k, they'll have some assistance for you. You can put in some information about what you have, what date you want to retire, how much money you think you need in retirement. And then it will come out and it will tell you how close you are on your goal. And if you saved X amount of money per month, then that you would be closer to your goal. So there's some ways that you can do it as a do-it-yourselfer. But when you're thinking about retirement, some of the important things you need to know is what % of your current household income would you need to pay the bills and do the things you want to do? I've found that it's not, you're not going to fall 50%. People will retire on December 31st and January 1st. On your first day of retirement, you have not changed your spending habits. You still want to do the same things that you did last month. You still want to go out, and you might even need to spend more money than you did before you retired, because you might want to start traveling. The early years of retirement are going to be the most active. And so you might spend more money doing some of the things that you want to take it off of your bucket list. So keep that in mind when you're looking at your retirement, because your budget is the most important factor of your entire plan. And if you can't get your budget right and you can't understand how much money you need in retirement, your numbers are going to be completely off, because if you underestimate what your spending is going to be, then you will be very optimistic on your ability to retire. And when I'm working with people, I talk to them about it's a lot easier to work an extra year prior to retirement than finding out when you're in your 80s that you ran out of money, that you don't have enough money to finish your retirement. That's not the time you want to go back and try and get money or try and cut back when your healthcare costs may be a little bit higher. So really being honest with yourself and doing this plan is important. Knowing which age you would like to retire, liking, and then also willing. Thinking about whether or not you would work part-time in retirement. Those are all important and part of your creating your plan. Oh, another thing that's on here is your estate plan. Make sure that that is also in place. That's a really important part, to make sure that your assets are going to who you want to. If you're divorced, if you have children, make sure that you have updated it. You look at your beneficiaries, especially the one on your 401k. You can use beneficiary designations on your investment account. If you have accounts at the bank, instead of having beneficiaries, they have what are called transfer from death designations. So you can talk to your bank about, instead of allowing the money to transfer directly to the person that you want to. So you can add a transfer from death designation. So, talk to your banker about that. Educate yourself, and attending webinars like this is a good idea. Reading the newspaper, following people who are leaders within the industry on financial advice. Not following the get rich quick. I'm not a get rich quick person. It's more of a slow and steady and deliberate. Being consistent with what you do is really important. Understanding what inflation means and really understanding how if you feel like you need $50,000 today in order to live in retirement, that it's actually going to be 10 years from now. If you're 10 years out, if you're 55 and thinking of retiring at 65, you're going to need $64,000 to buy the same thing that you would today. And so that's important as so you're looking through your plan too. And I will, looking at your level of debt. So when you're putting your plan together and we've got your goals, how are you going to attack that debt? Do you have the income to be able to do it? Can you save? Are there any ways that you can cut back on your expenses? Monitoring this plan is really important. So kind of having that meeting with yourself each month, go through and look at your progress that you've made. Look at your assets. Have they gone up? Have your liabilities gone down? And then your net worth is going to increase. So, take a look at that every month. Social Security, if you're thinking about retiring or you're closer to retirement, understand what your Social Security benefits are. You can go to ssa.gov and it's going to be right here at the bottom if you haven't done it already. Social Security used to send out an annual statement that told you how much you make, how much you've made over the last course of your employment, since you've been reporting Social Security. It'll tell you what your estimated benefits are based on retirement at age 62, I think at 65, and then at 67 and 70. It'll tell you based on if you're disabled, what your benefits are you're eligible for, what your spouse could be eligible for. It's important to check your record periodically to make sure that your income has been reported. Social Security is calculated based on your 30 highest annual, it's an index number, but it's based on 30 years history and the highest 30 years history. So if you're missing some years that, I did have a client where their information was not reported, that they had a 0 and that was incorrect. Somehow the file was lost when it was transmitted. So you want to make sure that everything that is supposed to be reporting to Social Security is. You just have to log in. I know that there's some kind of identification that you've got to go through, but you can go in and look at your record, and that will give you an idea of how much you'll have in retirement. The difference between full retirement age, it will give you your full retirement age, which is based on your date of birth, and age 62, you lose 8% per year for every year that you take an early retirement. 62 is considered early retirement, so keep that in mind when you're thinking about your goals. And then finally, put your plan into action. I know that it can be really overwhelming when you get all this in. If you have a financial professional to help guide you, that's something that I do. I'm a certified financial planner. And here's some questions if you're looking for a financial professional that you can ask. Sometimes I know that some employers have might have a financial professional who comes in to help with their employees. So, do some research and see what makes sense for you. But I know that I am already almost out of time, so I will open it up for a few questions. If anyone has anything, any questions. Also, if you would like to get a copy of this in paper, feel free to email me at lori@laurelwm.com, and I'll be happy to send one out to you.
Okay, thank you so much, Lori, for all of that wonderful information. So before we jump into the questions, a couple of things I want to remind people of. This worksheet that Lori went through just now is available in the handout section. If you're on a desktop or a laptop, that would be in the handout section of your control panel. If you are on a tablet, then it would be on the little people icon. You just tap on that and you'll be able to see the handouts that are available. Also, if you have, I know we already have a few questions, but if you want to sneak any more questions, I don't want to say sneak, definitely ask any questions. If you have any other questions for Lori, please be sure to put them into the questions section. So one question that we do have somebody asking is, and I know this may be a long one, but how important is your credit score when it comes to doing financial planning?
It depends. Really, it's going to be based on your goals. So your credit score isn't important to start financial planning, but I've had clients where, and we're not trying to manage credit. My goal is working as a financial planning is not to manage your credit score, but through making payments on time, lowering your debt, your credit score will improve. So it's your credit score is going to be important if you're trying to refinance your mortgage. You're trying to open a checking account, buy a car. That's when your credit score comes into play, but your credit score is not important to start financial planning or to start any of these, any of the steps. The more information you know about your finances, the better.
All right, awesome. And we also have somebody else asking, how useful are budgeting apps in helping you keep on your financial goals? So along with this worksheet, would a budgeting app be useful?
I know that there's like You Need a Budget is one of the budgeting apps that I've had clients who have used before. You have to find what works for you. And not all of the apps are gonna work for everybody. I'm actually an Excel person, so my budget is in Excel. I got frustrated with some of the budgeting apps, and so I just started using Excel. You have to find what's right for you. They do require work. You just aren't going to log into one of the budgeting apps and everything's going to work for you perfectly. So when I was talking about some of those aggregation softwares, what's nice about those, and I think Quicken has one that's you can buy or pay a monthly fee for. It's the Mint you'll get ads and things like that. But in some of the other budgeting software, they will pull in all of your accounts. You can link them. They're not saving your passwords. There's nothing that they can do on it, and you'll be able to see all of the expenses. It typically, the one that I use with clients, it will know most popular places. Like it knows Publix is a grocery store. It knows it puts Starbucks under a restaurant. But you have to go through and categorize unclassified items. And so after you start classifying them, it learns them. You set rules up, and so it gets easier as it goes along. But I'll tell you, budgeting apps do require some upfront work. They are not just going to, if you think you're going to get it and it's going to be really easy right when it starts, it's not. It can be frustrating, and it can take a couple of months, because I have worked with clients where where they wanted to use and they thought that was a great tool for them. You need a budget, but you've got to try a few of them and give it a chance. Really put some time into setting them up correctly.
Awesome, thank you. And I would have to, as the non-financial professional, I would definitely agree with you on that. They're definitely not set and forget. I know a popular one, we just had a budgeting apps class last night, and one of the popular ones was Mint, but my personal problem, and I know a lot of others' problems with Mint, is that you have to link your bank account to it, which is something that I personally was not comfortable doing. But like you just said, it really depends on what your comfort level is and what you want the app to do. So that is some very good information. And I think that is it for our questions. Thank you, Lori, so much for joining us. So just a few quick things. Of course, contact us. You can contact us by phone, email, text message, chat, all the different ways. We always encourage you to submit your library story, especially if you have a money smart story. If you want to check out other upcoming classes and events, there's our link there. Again, this program was part of our Money Smart Week programs. I had dropped that link into the chat, so the little people icon if you're on a tablet. So I also dropped the handout, which is also on that little people icon as well. So definitely check out those. One more time, thank you again, Lori, for joining us this evening. All of this was wonderful information. Thank you so much.
Okay. Bye.
Bye, everybody. Have a good night.